Welcome to the Curiosity Crisis. We challenge ourselves to explore the world of business, tech, investing, and science. Get curious and be part of the journey as we discuss, challenge, and learn. Today, we're chatting to Dan Wimmer. Dan is the founder of Menace Company and started it in 2013 with his brother Jack. Menace is a bespoke clothing and wears company that embodies a lifestyle that is not for everyone, but it's real and original. Outside of Menace, Dan invests across the landscape and particularly is a specialist in speccy or speculative company investing. This is a high-risk, high-reward type of investing that catches many eyes in the stock market due to the potential to make seriously outsized returns in the order of 10x, 20x or more. As Dan has built his experience focusing on this niche style of investing, I'm keen to pick his brain on his key learning in the world of Speccies and get some interesting stories while we're at it, because I know not everything's going to be a winner. For context, a speccy is typically a small market capitalization listed company, which might be in an exploration or R&D phase and trying to make that big find that would seriously change the prospects and fortune of the company. So without further ado, Dan, how you going?
I'm good, Kush. Cheers for having us on. First podcast.
Yeah, no, stoked to have you here. We start all these episodes with the question, what's keeping you curious at the moment? And basically we answer with, anything you're reading, you're learning, you're trying out at the moment. So, yeah, what is keeping you curious at the moment?
Mate, a pretty heavy one, but I don't know, I've just been thinking heaps about AI lately and just how it will eventually, where's the next phase of, the human evolution with AI?
Yeah.
Because eventually, it's getting so good. Will we be programmed into something? Will we leave, actual physical bodies? I listened to a really good podcast actually the other day.
Yeah.
So, that's what's keeping me curious, how AI will essentially either replace us or enhance us.
Yeah, okay, interesting. I got sent today by Luke, actually, who's obviously not joining us for this one, but is the other co-host of Curiosity Crisis, a new LLM. I can't remember the company, but he said basically it's phenomenally better than ChatGPT, and it was open source. So
yeah, no shit.
This stuff's already coming out. So the progression.
You've seen that Sora? I'm pretty sure OpenAI Sora. I haven't looked into it properly yet, but I saw these videos it created, and I don't know how easy it is to create them, but it's pretty frightening.
Yeah.
It's going to get to a stage soon where, it's probably already happening, to be honest. Anything on politics or stuff like that, is the video real or not?
Yeah.
Going back to the AI thing as well, you can get to a stage where you could have, say, a political leader not having to actually be in the presence of people because he can just sit in a safe room and have a video record of him talking to a crowd, show on TV, and you believe he's actually doing it.
Yeah, right. There's a new ChatGPT tool out there as well now that's just creating images based on your prompts, and they were crazy realistic. So
yeah,
anyway,
I use the Midjourney one quite a bit.
Right.
It's good.
We might have to come back on and do an AI episode later.
Back to the Speccies.
But back to the Speccies, and we just want to jump straight in. It's always what we always do. So can you share us how you got into specky stock investing and what drew you to this niche specifically?
Speccy stock came after I had my first win, which was just a lucky break.
Yeah.
So a good mate of mine when I was growing up just kind of got out of high school. He was my friend Jack Lee, so if he's listening to this, he'll hear it. But he was right into stocks, smart dude, always reading the business section. We used to go for a swim, and I used to read it, look at him reading it. I have no idea about this shit, and just be he's talking to me about FMG and all these other companies, and I kept asking him, "Oh, can you help me?" Because I wanted to make money. Obviously, you just think you're going to make money.
Yep.
And he just kind of was like, "No." He's like, "You want to take it seriously and learn?" He's like, "Buy any stock right now." He's like, "Get $500 there, the minimum on ComSec at the time." And he's like, "Just pick any stock." He's like, "Because once you put your money in it, you'll want to learn."
Yep.
And I did. And my first victory was Capilano Honey.
Yeah, right.
And
honey.
Man, I literally just Googled stocks, and then I obviously got hit with the clickbait articles.
Yep.
And from there, I thought this article was legit. Well, it probably was, but to be honest, it's all tries to pull you in, pull the rookie in. And it talked about this sweet investment that we might have in our pantry, and obviously wouldn't give you the name of it because they want you to subscribe.
Yep.
And I just went crazy on Google looking up everything, and I saw one article that said Kerry Stokes has a sweet tooth for pretty sure it's Capilano Honey, and I went bang, that's the one.
Huge.
And a few months later, I think I turned $500 into 1,500.
Wow.
And of course, you instantly think that's how easy the game is.
Yeah.
Sold out of that eventually. And then that kind of put me onto the next high risk, high reward. I was like, oh, where can I make the next one?
Yep.
Got a good little tip. bang, lost that all. I'm pretty sure I lost all the money.
Yeah.
Or very close.
Yeah.
But that hooked me. I was I want to learn more about this. This is a pretty fun game.
Nah, huge. So that's so funny as well that like you got luck of the draw of the first one, but I completely agree with now that I've been investing for a while as well, is once you have skin in the game, you'll figure it out. Like you'll have to figure it out. What the company's doing, what different stocks and different holdings, and how they fit in, because at the end of the day, that's your hard-earned cash.
Yeah, it becomes like a fun little, almost like a hobby and game at first, because you don't think about the real implications at first. About losing money in that, especially $500. Like it's not going to kill you. If you lose 100%. It, and it gets exciting. And it was exciting to me because I've always kind of liked economics and just how things work. And it just draws you in, and then you go on that brutal ride. Yeah,
well, so speaking of the brutal ride, like after that, since then you've pretty much been into individual stocks the whole time. Yeah. So what got you from that into then your let's call it high risk tolerance type of investing, which is particular companies, not like big indexes or ETFs or anything? How did you get into that?
It was all still pretty small at first. I started with, 'cause I didn't have actually much to throw in it.
Yep.
But I don't spend much either. So I started, obviously working a bit of FIFO work here and there. Mm-hmm. So the money on there, I'd be like, I'll check this out. And then there was not even really much knowledge for me at all. I was kind of just going, all right, yeah, this looks pretty popular. People like this kind of stuff. And I just started dipping my toes in different stocks.
Yep.
And some were, there was really no strategy. It was kind of more like, okay, like gold seems to be going up lately.
Yep.
But eventually as you start, like, you got to learn regardless, aren't you? Whether it's a negative or a positive.
Yeah.
And then I suppose I found, we can talk about one stock, like, which a lot of people know, like Liontown was obviously my greatest win to date. Still is technically.
And for the record, and I got to give this to you, you told me when Liontown, you told me that these guys are a good buy at 11 cents.
I was preaching it for a long time.
I don't know what the peak was, but
I know what the peak was. Don't you worry. I remember that price very clearly.
Well, what's the story then?
Well, the LTR, if you go back on my gram and you scroll all the way down to like my first, I used to always post those when I was at work. Like the mine site ones as a joke.
Yeah.
I always hashtagged LTR. I'm like, that's like 2019.
Yeah.
So I was in it for the early days.
Yeah.
But basically with that one, I learnt a lot of my skill set, I guess, through that stock. It started off with me first going, I know lithium should be needed. Mm-hmm. Like the world governments and stuff like that pushing electric vehicles. Yep. It's just on their agenda essentially. So like, it's got to happen. Mm-hmm. And then I was like, so they started off the whole thing of, I just know lithium is popular.
Yep.
And then I started reading up about it. I read up about the main chairman, Tim Goyder, how he has history and things.
Yep.
Chalice actually hadn't taken off by then as well, so I didn't think he was like amazing or anything. He had big companies, but
so Chalice is another one of his companies that
Chalice Mining,
he owns, or he's a big holder.
Shim owns a big chunk of it.
Yep.
I think. I think he's definitely one of the main holders.
Yeah.
I looked at him, and then from there, just reading articles, and as everyone hates to say the forums, but the forums are a real part of like the learning experience. So I'm not going to shy away from them. Like where some people don't want to pretend they go on them.
Yeah,
like you do go on them,
unless
you're a stock analyst, something like that. But we do. So, and I started learning off that. You obviously get a few people that just up ramp like from hell and that, but there was always 2 or 3 people on, especially the LTR thread that would always. Right, this is before LTR taken off, by the way. So they were just writing heaps of shit, about grades, comparing things, and I just read them. And obviously, you take it with a pinch of salt. It wasn't like then I was going fact checking them across 6 other people's opinions.
Yeah.
But I was kind of going at that time. Well, what has this guy got to lose? Obviously, he might have a lot of money to lose, but at that time, I was like, who sits here and writes fucking pages after pages of this stuff, and no one's really criticizing him.
Yeah.
So he must kind of know his stuff.
So just for context, LTR, Lithium Liontown Resources, so lithium stock, and you mentioned grade. So you're talking about the resource of lithium in what they've got in their tenements and stuff.
Yeah. So that's where I started all learning about it. Then I started going, okay. I started being able to figure out what grades were fairly good. I wasn't pro at it, but I was like, all right, I've seen this in many reports before.
Yep.
These ones seem to be highly favourable. They're continuing to drill to prove it.
Yep.
Yeah, and it comes down to obviously the depth and, how shallow it is.
Yep.
If it's, all these things come down the track and eventually you go, okay, so next to key infrastructure.
Yeah.
How hard is it to get the shit out of the ground and into the port?
Yep.
and all those things. So
yeah, right. So the stuff that you were learning, and how did you tell what? So this guy was writing up about, or the guys on the forums were writing up about the resource in the ground and some of the like the external factors about why what they have might be really lucrative. And then how did you know that it was going to be good if the stock wasn't kicking at that point? Like, were they giving out announcements and the stock was kicking at those points, or did you
at that point, if an announcement came out, I'd read it.
Yeah.
But it's, let's just say it was a bad report for any. This is not just related to LTI, any stock. If it went down, it probably went down because there's people involved in it who know ahead of time. Not ahead of time, but they know exactly what they're looking for.
Yeah.
So for me, it wasn't like the report came out, I read straight away, bang, my investment position is exit or entry.
Yeah.
I was still kind of catching up. And I still am today. I don't read any report out straight away unless I see the report come out and I see, because obviously they highlight the grades sometimes straight away now. I see the grades are like grim looking.
Yeah.
I'm like, all right, I probably want to bail out this one quick because people already are. You know what I mean? Someone's always faster than you.
Yeah.
And so that's once I started seeing more people post about that, then I went like YouTube, and then I could go on actual other companies' investment reports and start comparing, because I had those guys point out the things I should be looking at possibly, because I kept seeing it repeated. So then the next report would come out for any company, and I'm like, all right, this is now what I start looking out for.
Yeah, okay. So you, well, a couple of things actually that are just reflecting on that I don't do, but I probably, it kind of contradicts my process. So like sometimes, for example, one of my holdings is Spotify, and I love Spotify because I use it and I know a hell of a lot of people that use it. And I just think it's a phenomenal stock. So I'm not buying the stock because I think the price will go high, or they make particularly good margins on anyone or on any customer. But I'm buying it because I know it's wholly adopted. It's a loved app. It's just like on the consumer level, it's really good. So then that's sort of taking into consideration like consensus on the ground. But then by reading the forums, which I don't do, you're literally just getting the consensus on the ground. And the whole point about markets is that it's just you buying and somebody else selling. One human buying, another human selling, and a lot of money is made on those like behavioral swings and the volatility in stocks and stuff like that, which is crazy.
And like you said, you don't like have to read the forums for that. But you probably don't, because that's a bigger company, and you got to remember this is still early days. Once you get a bit better, you probably don't really need to read the forums anymore. Now I go on those things, and I'm not really on there anymore to learn. I'm almost going on there just for a laugh, or just to see the ground, just to see what the troops are thinking, because sometimes that can work, especially for a small little tight cap stock. The big boys like your Spotify and stuff, I don't think it's going to make. I don't think someone's opinion on that's going to fucking change the price or anything.
100%.
But then like you said, you start to figure out where to look for and all that. Key metrics.
Well, I love that as well. That's the other thing I wanted to comment on was like your pretty much calibration. So you learn about. So now when you look at company reports, roughly if a grade for a particular asset class, or like gold or lithium resource or commodity or whatever, is if they put out an announcement and it's trash, then you're like, all right, maybe it's time to cut losses and get out of here. So you literally learnt that and calibrated it by going on these forums, learning about a company, getting into it more and more, and then sort of seeing how it shapes up against a couple of other companies in that industry.
Yeah, pretty much. Like that's how I wouldn't even have to invest in them. I just look.
Yeah.
And I'm like, but then, and the thing I started learning after that, I was like, okay, first I was like, it's just grades. That's all I thought about. And then you listen to YouTube. Yeah. You listen to like proper CEOs or people talking about mining. Like I was listening to one the other day on Deep Yellow uranium, that John Borsov guy. He was talking about, again, he obviously to talk it up a little bit. Yeah. But he's saying, the grade's not always key for aspect, because it's, can you get it out the ground easy? Can you? Yeah. So that's at first I started looking at the grades lower than the last one. It's going to be bad. But then you got to look at it like you take like Wildcat for example. Grades aren't as powerful as some. Shallow, very big, very wide deposit, and also the fact that it's super close to Port Hedland key infrastructure. Yeah. It's cheaper. Yeah. I mean, I'm not like stockhouse. I can't look at these like future forecasting things, but that's how now I'll look at things too. I go, okay, and then you see something like a stock like that not go down, and you're well, that grade was not as good as the last one. Why? And then you start figuring out other factors. This is what these pros are looking at. It's not always just about best grade. There's so many little factors into it, and some can just cancel out each other. And that's what I love. That it's always a learning experience. So you'd say that you're now focus, or like your area of expertise, or
where you've learnt everything is mainly in mining and resources? Yeah.
I'd definitely say that, eh? Like, obviously I can read, I can read, like, if I can read, like, say step one, like on the web brand, obviously it's like retail.
Yeah.
I can kind of compare that to my business structure. I'm like, oh, they've got good sales, good growth, ad spends, blah, blah. But the mines where I started in, it was the most easiest for me to figure out. Try the biotech game. Yeah. That is the biggest gamble for me, because I don't know anything about that.
Yeah.
You would just be like, oh, this gone up 200%.
Well,
down again.
Because I love the fact that, like, maybe even before, I mean, I know you did some stints up at doing FIFO, but like from that you probably weren't like a magician or knew everything about mining, but you sort of learned it just by like learning the stories about a bunch of different stocks and like sort of calibrating it up and down, which is
put yourself in the trenches.
Yeah,
and you learn. It's not maybe the best advice, but you can go and try learn it in some uni. If you want to do it properly, go ahead. But a lot of people, I have a lot of friends who go, oh, I got to get into shares, I got to get shares. Like my friend said to me, get involved. Yeah. If you get involved, at least you're involved. You might lose, you might win, but you're involved now. It can't really go, like, if you're not involved, you're not getting anything, are you? You got to go where the action is, I guess. So.
100%. And the fact that then after that you learnt about all the business sort of logistics side of things, how, like, sure, there might be millions of dollars worth of commodity in the ground, but then to actually get that out and sell it to the market, which is China or whoever, might cost a hell of a lot of money. So that also comes in. On the flip side then, so obviously LTR was a big success story. You learn about it, and you learn about it coming up. You read all the reports from the theses or whatever that people were putting on the forums and stuff like that. What's one that you didn't do that sort of stuff and you had a big failure?
There's probably heaps of them. There's heaps of them at the start.
Yeah. But hang on. Before we go into it, this is the asymmetric upside of investing. You could have made, I don't know actually what you made, but like you could have made like 20, 50x or whatever on LTR, but then you can lose 100% of one stock, but like one stock going 30%.
Yeah.
No, sorry, 30 times what you made versus 1 times down. Like
one big win, you have heaps of losers and one big winner.
Yeah.
And it keeps you, and that was the big winner for me. And that allowed me to then, have more cash to put into more things. Now we're not going $500 anymore. We're a bit riskier. And if you want to talk about like downfall, which is something that most people who listen who haven't got involved in it, is once you start having easy wins like that, you trick yourself. You think you are like the king. You're not though. And like I definitely fell victim to that mentality at some things. I look at it and be like, nah, I'm convinced on this. I've done my research on it, my value research. But then you're not. Liontail's still convicted to production. Like I always had that mindset, in and out of it. But the rest of them, then because I took that victory and I didn't have actually a concrete idea. Right. And that's when you start to doubt yourself. Yeah. That's when you make stupid mistakes.
Right.
And when I say doubt, I don't mean doubt as in selling. Sometimes you might buy more. Yeah. But you're still doubting why you do it. It's like it's not a good mentality to have at all.
So you need to have that
dearly.
Clear, like, so the thing is, like, sure, you've been in LTR for a long time, and I actually didn't know you were in since like 2019 or earlier. That's like 5 years ago.
Yeah, started 2019. Yeah, I thought I missed the boat when it went from 2 cents to 4 cents. Yeah. I was like, I missed it.
Yeah.
But no, obviously. So, are you happy about
that? But so do you think a difference was that you put heaps of time into that one, and then after that, when you had all this capital, you're like, well, let's go, let's get into more winners.
Yeah. Definitely. And and also it's you do the research on it, but you got to remember as well, like if it's like a small market cap stock or this that, like things go down, things go up. Yep. You just got to kind of know what is your ideal exit plan for that. Yeah. If you don't have an ideal exit plan, even if it's not, you don't have to be like so precise. Like, I'm bailing out this sense because it's valid. Like, most people getting into it fucking wouldn't have a clue about it. Yeah. But if you have a rough idea of why you're in the first place, like, I don't know, even look at, I'd say a gold mine, I'm going to get into because eventually they will be bought out because they'll prove a resource. That's your goal one. Yeah. As soon as it just goes down one day, 6% or whatever, and you just go, oh, it's gone shit now. Yeah. I got to get out. It's like, what are you thinking? Like, things go down and up, but that's what happens. Like most people, especially get involved, where I did many times. Yeah. I saw it go down, got played by people pumping and dumping it. Yeah. Freaked out, got out at a loss. Yeah. 2 months later, all calm back on. The company actually never went wrong.
Yep.
The company was always on track.
Yeah.
It's just that price. That price, what does Jeff Bezos say? It's like it's a voting machine and a weighing machine at the end.
Yeah.
At the moment, people are just voting up and down,
Yeah.
and you're reacting, but eventually it comes together.
It's a weighing machine. Well, that's so interesting. Like we've talked about that before on the podcast, where like stocks move. Well, in Specky world, they probably move like double digits, like 10-20% a day. They can or more, but the actual value of the company doesn't change that much at all. Like it's just another day, and they're incrementally building. Maybe they have to deal with like a little fire to put out, but it doesn't change the value of the company literally 20% in a day.
Yeah.
It's just that. And I also love it because like there's a lot of things that you just said that are very you can transition them to other investments, whether they're stocks or other things, but they're still applicable in Speccy's high risk sort of investing because
definitely.
It's like you need your idea and you need your conviction to be like, this is why I've got this company and like why I think it's going to go well. Like nobody's a genius, nobody's going to get everything right, but as long as you stick to your guns.
Yeah, but eventually, as you go on, the idea becomes you want it like speculative stuff. It's like again the word speculative. It's if you're coming in and being like, this is the one I park in now, and it's like my super.
Yep.
It's like shit, lad, that's not a good idea. Now I would have done that, 4 years ago or something like that. When I was first getting it, I was like, this is how it works. Like, why would I put it into a low compounding thing when I could just get the the 10 bags straight away? Doesn't that's the rookie thinking. And you go through the trenches, and then eventually you get, beaten up and bruised, and have some good times, and then you go, all right, I've figured it out now.
Yeah. Well, so that's an interesting thing. So is that where your sort of risk tolerance, like for example, if somebody getting into investing and reading some of like the super simple books that say like get into your ETFs that are pretty safe and all that sort of stuff. Obviously, there's nothing wrong with that. There's heaps of different ways to go about it. This is just one specific way. So how did you build this sort of acceptance of the risk with speculative investing? Is it just because you started like that and you just got used to it?
Yeah, possibly. Also, because like that first win would have done for me. Everyone has like a bit of a, like some people like I don't use sports bet or anything like that, but people like that chase. That chase probably came to me and a mate of mine called it the bug. But the high risk tolerance kind of came where I was like, if you lose a bit, I was like, oh, well, I can recover from this. It's all good. I don't have a family right now. I don't have a mortgage I'm paying off at this time. Well, still don't, but anyway. And but then the high risk tolerance, it just gets to a stage where you get that I don't know. It's like that taste of victory at one time. You're like, all I gotta do is just get one big win and I'm back to normal, which is not a healthy mindset to have at all. And I'm not promoting that so much in a sense, but that is the reality of it. That's you just go for it. You go, all right, I'm going to change my style here and go there, and hopefully I'll get the same result. Doesn't happen again. You go back, and eventually you just get beaten. You either get beaten up enough where you have to pull back, or you get the victory and you can restart. Let's go again.
Yeah, well, that's the thing. Like, so the difference between, I suppose, like a chart of somebody that's going through the like much more stable, like slow investing is like, this is a podcast, so you can't see my hands, but like their chart would be probably slowly, incrementally going up at a very low gradient. Yours might be like up and down, down for a while, and then bang, huge win, and then your like overall 2-year or 5-year return is massively in the green. So it's just
and then it can also go straight back down. As I've learnt many times. And that comes back to the conviction of it too. If something you get into it and you're waiting and then something it shoots up to the moon, don't think you're safe there now. Like, unless it's like a massive company, like back to your Spotify or something like that. Very unlikely for it to drop 30% in a day. It does. That's a very scary sign. But let's go look at most stocks. Like most mining stocks have been slaughtered lately. You would have thought if you're at Chalice at $12, you bought in $1. You would have thought you're well at the zone. You're like, I'm well past $1. Almost it's back to $1 now, I think. Just big change in the commodity and just the overall sector in general. So you get it, like that comes back to your exit plan or your thing. You got to go, okay, it's up here. Hopefully you've taken some profits along the way. I can't say I'm not going to sit here and say I took all the profits all the time. I definitely could have taken a lot more. But it's hard to give someone a plan and tell them what to do, because you can read all the books when you get new into it, but you're gonna have to make the mistakes as far as I'm concerned. Unless you're like, this is your career job, a bit different. But if you're getting
even the pros make mistakes.
Pros make mistakes all the time. They go bankrupt. So mass things. Something I beat myself up about. I'm like, oh, I got it wrong. Get quite annoyed. It's like, fuck, man. So did a lot of people. But yeah, you just have to make those mistakes. Like, don't be scared.
Yeah.
Get in the game.
So that's, I mean, I had this question written down, but like I think we've already got it. Like any common pitfalls or mistakes, it's just people, I suppose, overreacting and like getting scared out of it or feeling too safe when they're up, sort of thing. Like it's like a highly volatile game, and I suppose would you say the overarching thing is just that acceptance that it is a highly risky and volatile game in this specific niche.
100%.
So yeah. Well then, all right. Well, this is probably one of the last questions because we're probably closing to time a little bit. But what sets a successful investor in this sort of specky high risk space apart?
I think now, if you know the company, know the sector that you're in, and hold your nerve, have conviction. You know, don't change strategy just because it drops one minute. Don't rethink your strategy. Like when you commit. You commit to it, you know? Yeah. That's, definitely. Just learn to control your emotions, because that is literally the biggest thing of speculative investing is emotion. It's not, sometimes not strategy. It's just, can you deal with your emotions? Well,
that's the thing. I've heard that as well. There's this other investor, Owen Rask, that talks about like, you know, the first thing that amateur investors need to sort out is, rather than any technical skills, is just mastering their emotions and their reactions. And I think he or somebody else says like often the best thing you can do in investing is nothing. Once you've bought, just buy. You've bought for a reason. That's it. And don't be like, oh, I'll get it out now, I'll get it back in later, or what's going to happen now. It's just like stick it out and
it's very easier said than done, you know.
Yeah, true.
Like I said that right then, but it's like, you know, suddenly the market's down a little bit and you're checking your phone, blah, blah, blah. It's just one of those things where, you know, the longer you're in the game, in my opinion, the more you got to learn, the more battle hardened you become. Yeah. And if you start when you're, you know, in your 20s or, you know, late teenager, at least when you get to 40, you're not starting then, you've got some experience. You know, most people start maybe when they're 40, then they make those mistakes. You don't want to be making those mistakes, man, with your super and kids and family. Like, that's not, at least making mistakes now, you recover.
Yeah.
You know? And I say mistakes because you will make them. So
I love that. I love the story, and like the key message I'm getting out of this is like, you're gonna get it wrong. Everyone's gonna get something wrong, but you learn from each one. And then like overall, you might not still be picking winners left, right, and center, but you will know how to deal with the feelings of like dealing with volatility, dealing with like a market downturn in a certain commodity, like sitting through it. So.
And this is just more speculative talk. Yeah. If you want to just get into it and just have some ETF, where you said, or some fund, sit back and relax. Yeah. Great strategy too, by the way. Yeah. Then maybe some of this high risk emotion stuff that I'm talking about will not apply to you. Yeah. Unless there's another market crash, which, you know, we can talk about that one.
Well, that's literally why I was so keen to get you on, because there's no right way to do this. Like people write books about investing all the time, but you can't say that one way of investing is better than the others, because for a while, like maybe your portfolio will be down, but then you'll, like the winner, the 30xer that cancels out, you know, 29 zeros sort of thing, and just absolutely blow it out the park for that year. So versus somebody that's just compounded at 7% for the last, you know, 7 years. And all right. Well, looking ahead, is there anything you're particularly excited about? Any sectors, companies, trends?
Well, I'm excited for one sector to come back up again. Yeah. So I think you can guess that one.
Lithium. Yeah.
That one would be quite nice. And what else would I be excited for? Just this. I don't want it to happen. I don't want a crash to happen at all. But this whole doom and gloom thing, everyone's saying the crash is coming. You know, you get a bit excited when the market comes back up. All right, we're back at it. We've had like technically three crashes in the last 3 years almost. 2020 that was miserable. Yeah, I just kind of want that to be over and done with or something like that. But I don't think I think that will be dragged on. Yeah. But yeah, just looking for things to recover. Yeah. If they ever do.
Nice. Well, a lot of them are down, but the thing is structurally, you know what I mean? Lithium's down, graphite's down a bit, nickel's down,
copper, everything's smashed. Yeah,
they're all super critical to this whole like energy transition, batteries, EVs, all that sort of stuff. But that's happening on the commodity side, but on the ground, like these trends are still structurally, you know, heading that way. Maybe there's a slight speed bump, but if we're going to get to where we need to be in terms of the whole net zero movement by like 2050, there still needs to be a ridiculous ramp up. So it's almost like, for me, it's a bit of a sit tight situation where overall, when you look out, when you have that risk tolerance and you're not investing the money that you need to go buy groceries with, sort of thing, like you can sit back and just like let it ride for a year or two. And
exactly. Just let it ride, just make sure the company's not going to go bankrupt, and you should be fine.
No, epic. And one that's just come out the top of my head. I mean, you mentioned about like understanding a bit more of the logistics and like a bit more of the business side of things. Especially even in retail, if you have any of those holdings, how does your business experience with Menace sort of feed into it? Does that apply, or is this pretty mutually exclusive when you come to specky investing
and my business?
Yeah.
What do you mean? So how do I think about?
Has anything you learned, like the stuff that you've learned through the business or your experience through the business, impacted your investing like style or what you put into it?
Not really, because it's like, I suppose like mining and online retail e-commerce is very different. But I will say this: I've read like company reports of e-commerce giants, like you know, and I've kind of gone through their stuff. Yeah. And I will pick out things like, oh, that's actually pretty smart. Wow, they got that down. Yeah, that's looking good. So that definitely. I'll read that and sometimes put it on, or I'll see that, they always report we tried this strategy and, X results, blah. Yeah. But not really.
Yeah. Last thing then, I suppose, where to for your investing? Is it, you think you're going to keep doing this specky listed stuff, or I know you've invested in Field, which is a growing tech company in the US, not listed yet.
Yeah, still speculative.
True, still speculative. Yeah. Where do you see, going forward, what are you going to do?
Going forward, like now I've hit like a different stage in my life. Like I've had the new the fun battles, where it's all exciting to me. Yep. I've definitely matured a lot more. Yeah. I'll still always, I'll still always look for those little wins, but I will be getting, especially with the business now, I'm really just focusing on that. Yeah. Try and get a good cash moat in that side of things. Yeah. And we'll be looking at more kind of longer term strategies now. Like one of my mates, the houseway I was telling you about, like, he's almost the exact opposite of me. Yeah. So he's very, very contrast opinions. Yeah. But he's good at maths, man. He shows you these strategies and stuff like that, and take the long term approach. And it's a more successful way. Not as exciting. Yeah. And it might not always work out, but it's more guaranteed. I'll be probably looking more at those things now that you got a bit of the money to begin with. You know what I mean?
Well, this is what Luke says a lot. He says, at this mine at his age, sort of like in mid-20s, you're in like I suppose sort of yours as well. Or like when you're pretty young, you don't really have much wealth to play with. So what are you trying to do? You're trying to build wealth. But then as you get later and as you get more other things to focus on and think about, then you might start allocating more to preserving wealth and then building. Yeah. And then you always have a ratio that sort of twists and turns each way as you go along. But
when you start and when you're younger, you can afford to make more loss. Yeah, that's how I thought, at least. Yeah, 100%. And you can bounce back if shit hits the fan. WS is the only place where you can go get entry level FIFO job for almost $100K a year. Yeah, I don't really know any other places that you can do that.
It is the goal.
Just jump in that one, you're back to you're pretty safe.
Mate, unreal. I've absolutely loved having you on, and I think we're definitely just about at time. So I'll sign off there. Thanks for listening. Find us at curiositycrisis.com and Curiosity Crisis on Instagram. We're on all major streaming services, so you can listen how you like. A favour to ask, if you got anything out of this episode and loved hearing and picking Dan's brain, please share it with a friend. Your recommendations are always worth a lot. So, Dan, thanks for coming on.
Cool. Cheers. Appreciate it.
Just a quick reminder, this podcast is purely for your entertainment and education. It is not financial advice. Everything we say is just our opinions, but we hope you get something out of it and enjoy it.